Welcome to Capital Catch-Up, the podcast where we break down the latest developments in Congress. I'm Victor.
And I'm Lenny. Today we're covering a slate of bills moving through the House and Senate, from aviation to banking, housing, and more. Let's get into the details.
First up is the Pacific Island Flight Alternatives Act of 2025, House Resolution 1536. This measure would let foreign airlines from Japan, the Philippines, and South Korea make scheduled stops in Guam or the Northern Mariana Islands on flights between the United States and other destinations. By amending existing statutes, the bill would exempt those stops from the usual prohibition on intermediate stops in international journeys.
The practical effect would be more competition on routes that currently rely on a handful of U.S. carriers, which could drive down ticket prices for travelers between Guam, the Northern Mariana Islands, and Hawaii. It also addresses a long-standing gap in service to those islands, where limited carrier options have kept fares high and schedules inflexible.
From a policy perspective, the bill reflects a broader trend of using regulatory flexibility to improve connectivity in remote U.S. territories. If enacted, airlines could offer more convenient connections, potentially boosting tourism and business travel in the Pacific.
Moving on, we have the Agriculture, Rural Development, Food and Drug Administration, and Related Agency Appropriations Act for fiscal year 2027, House Resolution 8646. This is an appropriations bill that funds a wide range of programs within the Department of Agriculture, from the Office of the Secretary to the National Agricultural Statistics Service, as well as research, education, extension activities, and the Animal and Plant Health Inspection Service.
In addition to the usual line item funding, the bill authorizes the Secretary of Agriculture to transfer money between offices and to collect fees for technical assistance. It also includes money for aircraft purchase and maintenance, building construction and repair, and even payment to informants who provide valuable information to the department.
For everyday Americans, this funding supports the safety of our food supply, the viability of family farms, and the delivery of rural development programs that can improve infrastructure and broadband in underserved areas. Appropriations bills like this are the engine that keeps the department's day-to-day operations humming.
Next, the No Frivolous Application for Short-Barreled Shotguns Act, House Resolution 3034, commonly called the NFA-SBS Act. This legislation would amend the National Firearms Act by removing short-barreled shotguns from the definition of a regulated firearm. That means the tax, registration, and record-keeping requirements that currently apply to those weapons would be eliminated.
The bill also preempts state laws that impose additional taxes or registration requirements on short-barreled shotguns, and it requires the destruction of existing records within a year of enactment. Proponents argue that short-barreled shotguns are often used for legitimate purposes, such as hunting and sport shooting, and that the current regulations are unnecessarily burdensome.
Opponents, however, worry that removing the registration requirement could make it harder for law enforcement to track these weapons. The debate touches on the broader national conversation about gun regulation and the balance between lawful use and public safety.
The Ensuring Children Receive Support Act, House Resolution 6903, has moved through the Senate and now awaits final passage. It targets individuals who owe more than $2,500 in child support by revoking their passports once the Secretary of Health and Human Services certifies the debt. There is an exception for people abroad who need to return to the United States on emergency grounds.
The bill is slated to take effect on October 1st, 2026. By tying international travel privileges to child support obligations, the legislation aims to increase accountability for non-custodial parents and ensure that children receive the financial support they need.
Critics have raised concerns about due process protections and the potential impact on individuals who may be unable to pay due to genuine hardship. The bill reflects a long-standing policy goal of using federal tools to enforce child support orders.
Turning to the Equal Representation Act of 2025, House Resolution 151. This proposal would add a citizenship question to the decennial census starting in 2030 and would change the apportionment formula for the House of Representatives to count only U.S. citizens rather than the total resident population.
Historically, the census has been used to allocate seats based on total population, including non-citizens, because the Constitution specifies representation according to their respective numbers. Changing that to citizen-only counts would likely shift seats away from states with large immigrant populations toward those with higher citizen ratios.
The bill also requires the Secretary of the Interior to report the number of citizens and non-citizens in each state. If passed, it could reshape the political map and affect federal resource distribution, making the census a more politically charged exercise.
Next, the Merger Process Review Act, House Resolution 6546. Every 3 years, the Inspector General of each federal prudential regulator would be required to review how that regulator handles applications for mergers of insured depository institutions. The review would look at processing times, sources of delay, and the impact of merger reviews on safety, financial stability, and competition.
The Inspector General would then issue a report to Congress, and the regulator would have to respond with a plan to implement any recommendations. This oversight mechanism is designed to make the merger approval process more transparent and efficient, which could benefit both banks and their customers.
The Keeping Deposits Local Act, House Resolution 3234, amends the Federal Deposit Insurance Act to adjust the treatment of reciprocal deposits. It would exempt a certain percentage of those deposits from being classified as brokered deposits, with the exemption level tied to the size of the insured institution.
The bill also mandates a study by the Federal Deposit Insurance Corporation within 6 months of enactment, examining the performance, benefits, and risks of reciprocal deposits. For community banks and credit unions, a more favorable treatment of reciprocal deposits could mean greater flexibility in managing liquidity.
The Enhancing Bank Resolution Participation Act, House Resolution 6555, calls for a joint study by the Comptroller of the Currency, the FDIC, and the Federal Reserve on shelf charters and modified bidder qualification processes. Since 2008, these tools have been used to facilitate the orderly resolution of failing banks, but the study will assess their impact on financial stability and the safety of banks, as well as the implications of private equity ownership.
The findings would be sent to Congress within a year, potentially informing future reforms to how we wind down troubled banks while preserving critical services.
Closely related is the Merger Agreement Approvals Clarity and Predictability Act, House Resolution 6570. This bill would require the Comptroller General to study the use of commitments and conditions attached to merger applications for insured depository institutions. The goal is to see whether those commitments align with statutory requirements and how they affect safety, competition, and the availability of financial products.
By shedding light on the consistency and predictability of merger conditions, the bill could help banks plan more effectively and reduce regulatory uncertainty.
The Least Cost Exception Act, House Resolution 6547, amends the Federal Deposit Insurance Act to give the FDIC flexibility to choose a resolution method that is not the least costly to the Deposit Insurance Fund, if doing so would limit further concentration of the banking system among globally systemically important banks.
The FDIC would have to set clear criteria for the maximum allowable cost and report to Congress on the economic difference between the chosen method and the least cost alternative. This could be a tool to preserve competition and prevent excessive concentration in the banking sector.
The Rural Depositories Revitalization Study Act, House Resolution 6536, directs federal banking agencies to study ways to improve growth, capital adequacy, and profitability of rural depository institutions. The study will also look at whether existing laws and regulations are hindering the establishment of new rural banks.
Rural banks are often the lifeblood of small-town economies, providing credit to farmers, small businesses, and local governments. Strengthening them could have a ripple effect on rural development and economic resilience.
The Promoting Free and Fair Elections Act of 2025, House Resolution 4823, seeks to keep federal agencies from partnering with non-governmental organizations to conduct voter registration or mobilization on government property or websites, and from using federal funds for activities directed under Executive Order 14019. Agencies would have to submit regular reports to Congress detailing any voter registration or mobilization activities they undertake.
This bill is framed as a safeguard for election integrity, aiming to prevent any appearance of government influence over voter outreach. Supporters say it reduces conflicts of interest. Critics argue it could limit useful partnerships that help increase voter participation.
The 21st Century Road to Housing Act, House Resolution 6644, passed by the Senate with amendments, is a comprehensive housing package. It focuses on expanding the supply of affordable housing, improving financial literacy, and addressing manufactured housing. Key components include reforms to housing counseling, a rental assistance demonstration, a whole home repairs program for low-income owners and renters, incentives for small-dollar loan originators, and new measures for opportunity zone housing.
By tackling both supply and demand sides, building more units while helping families afford them, the bill aims to reduce the housing cost burden that many Americans face, especially in high-cost markets.
The Main Street Act, House Resolution 6955, is another banking-focused proposal. It would phase in new capital requirements for banks over 3 years, adjust business plan requirements, and commission a study on de novo insured depository institutions. It also calls for annual reports from federal banking agencies on charter applications, rural depositories, and credit unions.
The intent is to make it easier for new community banks to launch and to increase transparency around banking regulation, thereby strengthening local access to credit.
Finally, the Failed Bank Executives Accountability and Consequences Act, House Resolution 7886, targets the individuals behind the collapse of banks like Silicon Valley Bank, Signature Bank, and First Republic Bank. It would give regulators authority to claw back executive compensation, impose fines on executives whose negligence caused losses, and bar those executives from serving at any insured depository institution in the future. The bill also requires regulators to finalize clawback regulations.
By holding senior leaders personally accountable, the legislation seeks to deter reckless behavior and restore confidence in the banking system.
That's a whirlwind tour of the major bills on the floor right now. Listeners should keep an eye on the legislative calendars for votes on the Pacific Island Flight Alternatives Act, the Equal Representation Act, and the various banking reform measures, as they could have tangible effects on travel costs, representation, and the stability of community banks.
Thanks for joining us on Capital Catch-Up. We'll be back with updates as these proposals move through committees and onto the floor.
Stay informed, and we'll see you next time.